Okay, so we're continuing with calculations. These are calculations related to closing and commissions. I'm going to try and get through all 5 lessons and the unit exam under 30 minutes. This is probably not going to happen though because it's a lot of math. And we have to do calculating. So you might just get through the 5 lessons and do the exam on a separate video. All right, we have a little video to watch.
If you want to be a real estate professional, there are a few rates you should be familiar with. These are real property transfer tax, mortgage recording tax, and property tax. The transfer tax and mortgage recording tax will be discussed in a separate lesson, so let's focus on property tax. Many buyers and sellers will want to know about property taxes. The basic equation for this is the property's assessed value times the tax rate. This gives you the annual amount of taxes. In some areas, this is paid annually. In others, it is paid semi-annually. So you just have to divide the annual amount by 2. An example, a home that sells for $180,000 was assessed at $175,000. The tax rate for the area is $1.25 per 100 of assessed value. That's the same as saying 0.0125 per dollar. So, if we multiply 175,000 by 0.0125, we get an annual tax amount of $2,187.50. The calculation can get more complicated. For example, an area may only tax at 80% of the assessed value instead of 100%. The tax rate may be provided in mills instead of dollars and cents. If that's the case, you divide the tax value by 1,000 and multiply by mills to get the property tax value. Don't want to do any of these calculations? You're not the only one. Check out the public tax records to get an idea of what someone may pay in property taxes. In the meantime, you'll find these formulas and others on your real estate math cheat sheet. Check it out.
Okay, calculating property tax. Let's look at the rates transcript. A home that's selling for this assessed at $175. The tax rate is $125. That's the same as 0.125 per dollar. So we multiply 130. We're going to follow this little thing over here. 130,000 times all right, let's say this is saying we're taking 175 times 0.0175 2275 would be the annual taxes. So you're taking the assessed value and then you're multiplying it by this. Or you can do it the long way. We just added the 0 in front of it. Okay. Mills. Oh no, mills. Okay. Don't worry about keeping all this straight. We have all the information about rates on your math cheat sheet. Let's look at this a second. In case we need that. In case we need it for the test. We'll open it up one more time here. Let's see. Converting percentages to decimals, the sales rate times the commission rate. Solving for variables, net to seller, loan interest. If you love all this math, you might want to become a mortgage person. Because this is what they do all day long. Alright, so some areas assess taxes per mills is assessed value divided by 1,000. That's what a mill is. Assessed value property by 1,000. So if their assessed value is 130 divided by 1,000, you have 130 mills. And then you would multiply any rates by the mills, in case we get a question like that. All right, transfer tax. All right. Transfer tax becomes payable when the deed is recorded. I don't think so. When the deed is, yes, it is. Okay, the transfer tax rate is the same in every state. I don't think so. I don't think that would be the same in every state. Paid by the buyer. They vary by locality. The transfer rate is the percentage of the total sales price or dollar amount of the sales price. And I do believe that is correct. So you would take the amount of the sales price divided by 1,000. It's almost like the mills thing. So you take the sales price and divide it by 1,000 to get your mills. That's how you do the transfer tax. All right, prorations. Moving right along. All right, let's see. Determine accrued taxes, prorates. What is being prorated? It's based on a 360-day statutory year or 365 year, depending on what it is. So accrued expenses go in the seller's debt column, and what this refers to here is unpaid real estate taxes. So that's why this is kind of important. So if you're going to closing table, you as a real estate salesperson are never going to have to do this. The mortgage company will do it, and they will go by the date. They will go, if you got 2 dates, month, and the year, they'll just go by the calendar date, and they will figure it out by how much is left. So whatever unpaid real estate taxes, they will figure it out. Rent collected, HOA fees, interest on the mortgage, utility bills that were not paid yet, and the seller will owe these. It will go as a debit in the seller's column. Okay, so what is this asking? The seller owns the day of closing, and it's on a 360 year. Statutory is 360 days. So it would be owed by the seller at closing. For a full month's past. All right. Now, okay, so we know it goes to the seller at closing. Now, this one? No, all right, well, we got one left, so it must be that one. All right, so taxes owed divided by 12 months. All right, maybe I need to take a picture of this because we have a test coming up and we need to make sure we pass it. Okay. Taxes owed divided by 12 months, taxes owed per month, and taxes owed per month times the number of full months already passed. And, oh my God, this is so complicated. All right, let's see what we got on here. Seller, Angela, is assessed real estate value of $900 per year. Closing is February 20. Oh, a leap year. Great. Really, let's make it more complicated, right? Angela owes for taxes accrued and not yet paid that will appear as a debit for the seller. Use the statutory year and assume that Angela owes. So I think they have a little... they used to have a statutory calendar. Let's see if they got one on Google instead of adding this up. Statutory calendar. Okay, so let's see. for mortgage lenders. It doesn't. Okay, it doesn't. I was thinking it might have a calendar. Alright. Angela owns the day of closing. So we're going to have March, April. Let me see. March, April. March has 30 days, 31 days. April, I don't know how many. April has 30 days. And then May has 31. I think April has 31 too. I'm like, I cannot figure that out. Let's just guess and see what the equation is. And we got it right. Look at that. I have no idea. Okay, so let's see what they did here. They did, I love it when I guess right. That's awesome. We also need to know how to solve it. Okay, so we got 900 divided by 12 months, 75. And then we got 2 months that were already paid. Okay, 2 months were already paid and not yet paid. How do they figure 2 months were not paid? I don't understand that. I guess because of January and February they didn't pay. Okay, so that makes sense. All right. Boy, that was complicated. It's easier just to guess than sit here and try and figure out what they're doing. Okay. All right. This time his property is assessed real estate taxes $1,400 for the year. Closing is August 15th, so it's going to be September, October, November, December, 4.5 months. I mean, we can try and figure this out. I don't know if we will. It's 1,400 divided by 12. Right? It's 116 times 66. So it'll be 116 times 67. How many months did we say we got? 4.5. September, October, November, December, 4.5. No, that's not right. Okay. Let's just guess and see. This is the formula. All right, so I got this one right. Divided by 12. And then they're going 7 months. The not yet paid is 7 months. So I'm doing this backwards. Okay, so they didn't pay the okay, they didn't pay 7 months. I was doing 4.5. And because you got a partial payment, you got to divide that 116 divided by 30 in half. Look at all this complicated mess. Oh my God. Who loves math? This would be a perfect job for you. Definitely not for me. I would be frustrated. Okay, so it's 875.04. Okay. Prorating rent. I have no idea. Okay, 2,100 divided by 12. They will occupy for 17 days. How much is the rent due? Okay, this is just for a month, so that's not going to be too bad. So you do 2,100 divided by 30 days, probably. I should have got it wrong. That way we would know how to fix it. All right, commissions. Okay, we got another little video coming up. Yay! This was what you all care about, right? Your commissions.
So, you want to work in real estate. To be successful, you'll need to have a basic understanding of math and a few formulas specific to the real estate industry. Many calculations you'll do will involve percentages and multiplying one thing times another thing. This is called a formula. Let's look at the formula for calculating a commission, which we hope you'll be using a lot in your career. To calculate the commission for a real estate transaction, you'll take the sale price and multiply it by the commission rate. This gives you the total commission the transaction will pay in dollars. Let's look at an example. A home sells for $150,000. The commission rate is 7%. When multiplying or dividing, it makes it easier if you convert percentages to decimals. To convert a percentage to a decimal, simply divide the percentage by 100 and drop the percent sign. In this case, this gives us 0.07. Multiply 0.07 by the sales price, and you'll find that this transaction would yield a total commission of $10,500. Keep in mind, the commission you receive will be lower if you split the commission with your real estate firm or another real estate professional. One neat thing about formulas is if you have two numbers, you can easily solve for the third. Let's say we want to calculate the percentage commission you earned on a transaction. We can find that by taking the total commission received and dividing it by the sales price. So, if you received a $10,500 commission check on a transaction with a sales price of $150,000, simply divide $10,500 by $150,000, and that gives you 0.07. We multiply that decimal by 100 and add our percent sign, we see that that transaction paid 7% in commission. You'll find these formulas and others on your real estate math cheat sheet. Check it out.
Okay, calculating total commission. You'll have these available through your lesson. All right, what does it say? Which of the following do you need to calculate total commission? Just two, I think. Okay. How do you calculate your commission? Sales price divided by commission. Two pieces of information. Commission equals sales price. No. Multiplying, okay. Sales price times commission. Okay. Sales price times your commission rate. Okay, you have a property listed at 160. The commission is 6%. Which you will split evenly with the buyer representative. Okay, so 160 times 0.06, 9,600. Really, you're only going to give out 4,800 eventually. Alright, this is a little tricky because the listing price is irrelevant. Okay. So that's why I was getting confused. So it's 9,000 divided by 0.06 is 150. So you're going to double this. This is your commission. Okay, that's why. This is very tricky. For all you math nerds out there, they got this figured out. And they love this stuff. Some of the math people love these type of questions. Then you would be laughing right now. Because I was like, I'm looking at the 160 and the 6%. And trying to figure this out. You can expect to see that kind of question on the exam, by the way. %1 of the sales price. That's what your percentage of the referral paid off. You got a referral check for $32.50. Those are nice because you don't even have to really do nothing but talk on the phone. And I think we already did this video. Okay, Just want to make sure we hit everything here. Calculating commission target. All right. All right, let's walk through this. If you're splitting 6% commission, 50% with somebody else, you'll bring 3% into the sales price. To calculate how much you need to earn $21,000 for the quarter, take $21,000 and divide it by 3% because you're splitting a 6% commission. So a lot of these involve more than one step. So you're going to take the 21,000 and divide it by 0.03. It's probably going to be 21,000 times 0.03 is 630. So what is that saying? What is the total value in sales you must hit? 700? I don't know. Because 21,000 divided by 0.03, or do we multiply it? 21,000 times 0.03. 630. That ain't even on here. All right. You'll need it. You'll need to sell $700,000 worth of property to earn 21. And this sounds like a lot, but you could sell one house and get this. One house every 3 months, and that would be pretty. It sounds easy. It might be a little. I mean, starting off, it would probably be difficult because you don't have a lot of people that believe in you when you're starting off. All right, we got one more lesson here we need to get through. Hopefully it won't be too crazy math. Oh, okay, we got another video. We love these videos.
When working with a homeowner that is selling their property, you will need to tell them how much they'll make on the transaction after closing expenses and brokerage fees are paid. You can use the net to seller formula to calculate what the seller may be left with after commission is paid. Net to seller equals the sales price times the percent to seller. The percent to seller is simply 100% minus the commission paid on the transaction, closing costs, and payoff balance on any existing mortgage. Let's go through an example. The sale price on a home is $150,000. If the transaction pays a commission rate of 7%, this means the percent to seller is 93%, or 0.93. Multiply $150,000 times 0.93, and the net to seller is $139,500. This was a very basic scenario, and any payoff balance and closing costs would decrease the net to seller. You'll find this formula and others on your real estate math cheat sheet. Check it out.
Okay, in reality, they may ask you these questions. However, it is not our job as a real estate salesperson to answer them. It is the mortgage officer that they are working with. So you do not have to sit and stress out over answering those kinds of questions. You just say, I'm going to refer you to your mortgage officer, because if you start giving them wrong information, they're going to they're not going to believe anything you say, especially if you get the wrong answer. All right, commission rate. Where's that formula at? Didn't we just see that? Okay, net to sell. Okay, this has got to be. This is net to seller. Commission rate. Oh, this is commission rate over here. This is sales price. If you start giving them the wrong answers, they're not going to believe anything you say, and then you're going to have problems. So most best, it's just to leave it to the professionals. I don't know why we got to. It's good to know this stuff, but however, some of this is pretty intense with these formulas, and there's like no way I'm going to sit there and do all these calculations for my customers, because that's not our main role in this. Our main role is to get you the house that you are supposed to be in. It's not to sit and figure out your debt to net income and what the commission is and all that kind of stuff. If it's simple math, I won't have a problem, but some of these are pretty complicated. All right, so your seller wants to net. See what I mean? This is what I mean by this again. Your seller wants to net 40. This would be, I would defer them to the mortgage company. Your seller wants to get 47,500 after the commission, but before other closing costs are figured in. At what price does the home need to sell? Now this one, I would go to the mortgage company, because if you give them the wrong answer, then they're going to get pissed. Okay. The seller to find the sales price, you want to net, divide by 95%. Okay, because some of it is going to be for the commission rate. Now, if you are a math lover and a math expert and you don't have no problem doing this and you feel pretty confident doing that, then by all means do it. Just be aware, though, that it's kind of risky. You know, you give them the wrong answer and you piss them off, then you're risking the relationship. All right, so what is this? The amount the net seller wants to net? That can't be right. That's what it's saying it is, though. 47,500 times 95. It's 45, 125. Okay. Okay, let's try it again. All right, so that's what price the home needs to sell. It must be no, that's not right either. Okay. Nope. What's left? 50,000? 50,000. I don't know how they got that, though. Can't figure it out. Unless they're taking the 451 and adding it to the 47,500. 451 plus 47,500. And even that, I mean, that's like 47,500. All right, to my math people, anybody can figure that out? Let me know in the comments. I want to see you still watching. All right, we got to move on because this video is getting kind of long. I probably already lost half of you unless you're math people. What's the minimum the house must sell for here? All right, so the minimum the house must sell for is 45. Mortgage still owed is 50,000 plus 95 times 95 times 95. So it must be like 100. Yeah. Okay. So if they still owe on it. All right. Keep in mind all these calculations are on the cheat sheet. All right, this unit exam we're going to do on the next video because I may have to take it more than likely more than once, and this video is already too long. So if you're interested in more math on these type of math problems, then you come on back to the unit exam. I'll probably label it taxes, tax calculations, tax and commission calculations, something like that. Okay, I'll see you all in the next video.